Good morning, guys, and welcome to the Camp Financial Stock Market Update. Before we get into the market as a whole, I want to take a look at a couple of stocks that I've got in my portfolio and just kind of go back and do a little run through on them. Why I bought, where they're at today, what it's done, stock's done since I bought it, etc. Just kind of to give some flavor and help those of you out there that maybe focus too much on the day-to-day gyrations of the market and don't allow things to kind of run. So I'm actually going to start with the one that I actually just talked about on Friday. And that's Blue Cap Reinsurance Holdings. So it paid another dividend yesterday. So, I didn't actually give specifics, I think, on Friday, but so back in March, so it's March 25th, 2015, I bought $400 worth of Blue Cap Reinsurance Holdings. So what I did is I bought 22 shares at $17.76 a share. Because it is an offshore, they're based out of Bermuda, company, you cannot reinvest the dividends back into the Blue Cap Reinsurance Holdings, so you just get the dividends put into your account. So since I've owned shares a little over 18 months now, it has paid out just shy of $67 in dividends, $66.88 a share, or 88 cents total on the $400 that I originally invested. So we're talking, it's about 14-15% right there in total dividend payment on my purchase. I bought in, like I said, at $17.76. It's traded as high as $19.51, and it's currently trading at $18.10. So it's up just a little bit, but the current trade in a little over 16 months is up 16.5% with the dividends. So that's why one of the things I like to do is buy dividend paying stocks. And here, so we'll take for example, so the second oldest holding in that stock investing system that I use, which is based on trying to catch a trend and catch a stock in an uptrend and let it run. Sometimes, like Blue Cap, they don't really move much, but here you go. So this one fits kind of the same mold. Thompson Reuters, I bought it on September 29th, 2015 at $39.95 a share. It's currently trading at $39.76 a share. It had traded as high as $43.68. So with dividends and everything that is paid, and I've just reinvested back into Thompson Reuters all of my dividends. So I bought 10 shares at $39.95. Again, that $400 investment. Even when you take out the transaction costs, right now it's up 0.5%. I've got an additional 0.35 shares as it reinvests the dividends back in. And I have a stop loss set on all the stocks in this system. Basically 20% is the most I'm willing to give back. But so even if this would turn against me today and drop considerably, I'm going to get out. I'm going to lose 14.5%. But right now, like I said, it's up 0.49%. We've been holding for over a year, and just continuing to collect that dividend, and let it run. And that's how, reinvested dividends is how you can continue to get somewhere, even in companies that you may not be sure of, or however you might invest. Reinvest in the dividends is how you compound interest, and that's how you grow wealth. So let me take a look at a couple more here. So let's look at this system. So, and we talked about Marriott Vacations. So this is the one where I'm looking to buy companies that I feel are undervalued. We talked about Marriott Vacations, so let's talk about Excelon. So I bought into them. So in here, this is a little different system. We push to start with $2,000 invested in each stock, and so originally bought in 59 shares on April 21st of this year, so almost 6 months ago. Bought in at $33.41. It's currently trading at $32.75. And they're a utility company, so they pay a pretty nice dividend. I've actually accumulated more than one full additional share right now, and so currently it's down. My current trade is down 0.2%. This system has a lot wider stop loss, so I'm willing to give back a little more because I'm looking to catch a bigger trend with them, on them just getting back to fair valuation. Now let me take a look here at the last couple. See if I can find it. Let's see where. Yes, there it is. Okay. So last year I talked about Aflac back in November. I felt like it was a good buy last year, and I was saying, it might be one that you want to try to get in around $60 a share is kind of where it was. I actually had specifically mentioned selling a put option at $60. That way, if it exercised, you got in at $59.45. You can see that on my website at www.getinshape.com, or getinshapeHQ.com, I should say. And let's go ahead and pull Aflac up today. So Aflac's trading at $70.62. So you're talking 16-17% price appreciation since December, as well as and actually when I mentioned it, I guess I mentioned it in November, you, depending on where you're at, you could have even gotten in as low as $55 a share and ridden it all the way up from there, as well as collecting the dividend of 2.3%. It's $1.64 for the year, but it's 2.3%. If you got in at 60 or 55, your actual dividend yield is going to be even higher than that. You're looking at probably 3 to a little over 3%. So I still feel like I think the Aflac's kind of found its maybe where it's supposed to be at, kind of where it's topping out at for now. But it could definitely, rise again from there. And let's look at the last one I mentioned. So that was Tower Financial Group. I wrote up a little article about them as well. And let me pull that as a different way to play the auto industry. They do auto parts manufacturing. So we wrote about that and published on August 1st, and I specifically mentioned I'd be willing to buy at $24 per share to get a potential upside of $33 in the next year plus the dividend. So right now it's trading at $22.50. It's down a little bit since we wrote about it, but you would have already collected at least one dividend, and you should continue to collect the dividends. Their earnings have still been strong, so I definitely feel like it's still a great long-term contender here. And that kind of goes through those. Let's go ahead and take a real quick look at the market as a whole yesterday. The utilities performed well. Banks, Bank of America had a great quarter, but pretty much traded even. And the market traded down about 0.3% in all three major indices. Service industry looks to be the most negative. Utilities were definitely where the most positives were. There's a significant amount of green in the electric utilities, and let's see if there's any bright red that pops out as certain stocks in the S&P 500 that got crushed. I don't really see any. I'm probably missing them. Hewlett Packard down about 3. Yeah, it looks like 3% is probably about the most that we've got anybody down. The restaurants was probably also another sector that was felt a lot of pain yesterday. So that's it for today, guys. Take care. If you have specific stocks that you'd like me to take a look at, do a little deeper analysis on, I'd love to do that. I can either, I'll make it part of this as well as write it up and post it on my website. So that's it, guys. Take care, and we'll see you tomorrow.